hang out here with special guest TSLAopt, and we have several members from the TMC community. I'm actually very excited about tonight's hangout because I think there were certain people and certain trades that happened last year, especially pre-Q1 2013 with Tesla, that I think are just amazing trades. And it teaches us a lot about the power of leverage and what options can do. And I'm not one to kind of be overly exuberant and undermine the risks, but options can be very risky. And there's plenty of stories of people losing a lot of money on options. But on the flip side, I think it's healthy to understand when a person does use it in the right way, what kind of leverage the person can have, and what type of results can accrue from that. And so that's why I kind of wanted to invite TSLAopt and kind of share his story a bit about how he found Tesla, kind of the trade he did early 2013, and kind of open our eyes on kind of the power of leverage, and see if we could store this away for a future time that maybe some of us could take advantage of, and it will probably benefit the whole community. So let's welcome TSLAopt. TSLAopt, if you can go ahead, just kind of share a bit of your background, and then we'll kind of go into kind of maybe how you started out with options and your previous background. Go for it.
Sure. So I work in the financial industry, and I'm pretty familiar with exchange-traded options. And I first learned about Tesla, I think in 2011, reading some article on maybe Seeking Alpha or the Motley Fool or something, kind of intrigued my interest. And then coincidentally, like a few weeks later, there was a PR event of one of the early alpha or beta Model S's coming to a department store near me, and me and a friend at work who both had talked about this Tesla article decided to go, and we went and we saw the car and fell in love with it and the interface. Even though you couldn't drive it, it was just to look at the time. It was, I think, in 2011 when it was. And so at that point in time, I decided to buy some Leaps in Tesla that would expire in 2012. And I'd followed the stock and the company for a year, from 2011 to 2012, and as time was getting close, it seemed that my Leaps weren't going to be in the money, so I sold out of them and I rolled them to 2013 Leaps or 2014 Leaps, and by that time my IRA account was down to, I don't know, like $2,500 or $2,700. I just looked at my statement. I was gonna try to show it just on this Google Hangout so you could see like the increase in the price. But basically, with a small IRA account like that, I wasn't going to contribute anymore. I just figured I'd just throw it all into Leaps and Tesla. I think I had like 5 or 10, 35, and 40 strike Leaps for January of 2014 expiry, and that was heading into January of 2013. So, as you know, the stock went up a lot, and I just kind of had myself committed to just investing this, small IRA all into Tesla as best I could. I kind of envisioned the stock going up a lot. I knew it was one of the most shorted stocks on the NASDAQ. And going back a little bit, one thing that perked my interest more than just seeing the car is, obviously I wanted it. I couldn't afford it at the time. My wife really knew I wanted it, and she was, putting the red light to me getting it. We had other things going on. We were about to buy a house and all this stuff, and we were struggling to get by as it was. But somehow, this is going to throw in, I don't know if any of you are sports fans, but I'm a big New York Giants fan. And in the year the Giants won the Super Bowl last, I saw going into that Super Bowl, I felt like they were going to win. And I put a $100 bet down like the second game to the end of the season. I just kept double downing until they won the Super Bowl, and it turned into $10,000. And I took $5,000 of that and put it on a reservation of the Tesla, knowing it was fully refundable, just in hopes I could convince my wife that one day we'd be able to get this car. But I knew it would lock me in for a test drive, And so when I got that test drive of the Model S, and then my wife came too, she saw how much I wanted it even more. I'd worked on her for like a year at this point to try to get this car. She agreed to to let us go get it, and I pretty much guaranteed her that our stock in Tesla or our stock options were going to pay for it, even though I had no idea at the time. But you know, she bought it, and if it didn't happen, she might have divorced me. I don't know, but you know, test driving that car gave me more conviction than ever that this was the right move to put everything in it. And so my taxable account as well, I started putting a lot of money in leaps and options as well. And then when they had their first profitable quarter, now fast forwarding back to when going into the spring of last year when they had their first profitable quarter announced, and you knew the short squeeze was about to happen because it was so shorted. I decided when the stock got up to like the $45, $50 range, it had broken out of that $40 high that it was stuck at for a couple of years and never got past. I just had a feeling that something was going to happen and it was going to go to $100 by the end of the year. I had no idea it was going to go to like almost $200 by September. So what I did was I just sold in my IRA account. I sold as many leaps as I could and exchanged them for September 75 calls. So the leaps, the 35 and 40 strike leaps were worth like $15 or $20 each, and I could buy maybe 10 of these $75 September calls in their place. And my taxable account, I didn't do as much because there's tax consequences I didn't want to face. But I did some of that too. And the rest is history, as you guys know. From 50 to 194 in September, it was crazy. And I just made a fortune in my IRA account in that time frame. It was really tough to work and not follow the ticker all day. So that's kind of what happened. And then after that, just to finish things off here, the stock took a turn after the fires, and I sold out of a lot of my.
1 second, Hirsch, can you mute your mic there? Okay. All right.
Okay. So the last trade I did was, after the price fell and my broker made Tesla no more, it made it not marginable anymore. So my taxable account, which I exercised all these options and held them on margin, I had to close out of a bunch of those shares to make sure everything was fully paid for. It was kind of a headache. And in November, when the new leaps went on sale or were listed for January 2016. I think there was a few of us on the boards looking for that, waiting for that to happen too, and I was one of them. And the price at the time was around 120, which was perfect in retrospect now. I just loaded up on a bunch of January 2016 250 strike leaps in like the $13 to $17 range. I paid for them, and they're $65 now. So I still have a core position of shares in both the IRA account and the taxable account, but half of my money went into those leaps, which are now a lot more than half of that. So that's my strategy now. It's more long term as opposed to 3 months or 6 months out like it was last spring.
Okay, cool. So TSLAopt, I want to go back a little bit and then try to dissect this a bit. So back in like 2011, 12. With your IRA, how much was there in there? I'm guessing you lost some money.
I lost a little bit, yeah. It was never. I don't think it was. I'll check again, but I don't think it was above $4,000 or $5,000 in 2011. But at the start of 2012, it was $2,700. Okay. And I was just pulling up my statement earlier. It was like a 19,000 something % return until the end of February for those 14 months. So it's pretty crazy, but. It's just some lucky trades that the stock went the way I thought it would go.
Yeah. So back in, I'm guessing 2011, 2012, you're thinking that it could pop at any time, right?
Yeah, and I had bought a bunch of these 2012 leaps that didn't work out, and I had to roll them into 2013s and so forth. Yeah.
Mm-hmm. Okay. So in 2013 comes along. And you're in some leaps, and then when did you get your car, and did that affect your decision?
That affected big time. That's a good question. I got my car in February, just over a year ago, and the car was amazing, better than just as good as my test drive, but every day was amazing. I had some mechanical problems with the car. It's another funny story. We're actually briefly corresponded with Elon Musk on email about it out of the blue. But other than that, the car was amazing. You know, I was one of the first 5,000 VINs, so I expected there was going to be some issues potentially. And my friend at work, you know, he had the car too. He got it around the same time as me. So the fact that me and a close friend at work were in this, you know, trading Tesla and had the car at the same time helped me with my convictions. And also these Tesla motor forums really helped a lot because I would read these every night and, you know, not be fazed by all the, you know, the FUD from the bears on, you know, Seeking Alpha or where else. I felt like if I didn't have the support of the Tesla motor forums and my friend at work, that, you know, then I probably would have been scared out of my position way before, you know, a long time ago. But you know, yeah, when I had the car, like you said, back to when I bought the car, it improved my confidence. I actually could talk to my wife into wiring like the rest of our cash savings into our taxable account, which was only like $10,000, but to buy a bunch of, that's when we bought a bunch of 75 calls in that account as well, because I didn't want to close out of the leaps for tax gains. But anyway, so that helped just having the conviction of owning the car. Now I'm a reservation owner for the Model X for the same reason, just to make sure it's the best car out there, best SUV out there.
Okay. So when did you switch over from your, I guess, your Leaps 35 and 40? Were they 2014 Leaps back then?
No, they were, yeah, they were January 2014 Leaps. It's
Okay.
confusing. Because, yeah, 2014 Leaps, January,
Okay.
yeah.
And then when did you switch those out to your September 75 calls?
So in the IRA account, I did that in, I had on my laptop here, I have the statement pulled up I could reference. Maybe I can reference it if I go away for a second. Let me just see. Yeah, I did that on, let me see here. Looks like May 2nd. May 2nd, I sold I converted 5 of the January 40 calls into, it looks like 35 of the 75 calls.
Okay. How much were your the September 75 calls?
At that time, $2.08.
$2.08.
Yeah, and the 40 calls that I sold out of were $15.10. So I did I guess a 7-for-1 combination trade spread on my brokerage platform.
Okay, so then going into, like say, so to give some background, Q1 earnings for 2013 was May 8th, so this is about 6 days prior. You switched out. So going into Q1 earnings, your full IRA account, it had 35 contracts of 75 September calls.
That's right.
Did it have anything else then?
Yeah, I think I held on to 2 of the the 40 calls.
January 40. Okay.
Yeah, just for a little bit of, you know, diversification. If I went all forward, you know, yeah, I could have done all of it. I didn't do it all.
Okay, got it. Okay, so then you go into Q1 with 35 contracts of these September 75 calls. They're $2 basically, and then after Q1, I noticed it spiked.
Yeah.
Like the next day, actually, I went in the day after Q1. I bought September 80 calls for like $6.80 each. I'm guessing these September 75s must have been like
$10 or $8 or something.
Yeah, about $9 or so probably.
Yeah, I remember the whole way up. It was really nerve-wracking. Like, oh, am I going to be in the money? Yeah, but
yeah.
Anyway.
So these September calls quadruple basically like overnight, right?
Yeah.
So are you tempted to sell at that point?
That's another interesting story, or not story, but interesting part of the equation that makes me have such a successful return is the fact that I work in the financial industry. I'm not allowed to trade during the trade day, so I can put an order in before the trade day starts, right? So a limit order in, I can calculate my spread order, you know, at night, and then put it in so it goes off during the day. But you know, when you watch the swings during the day, intraday, then it makes you want to get out when it goes up 10 points or it goes down 10 points. But when you have that breathtaking of time overnight, you kind of think long about it, and you're like, okay, stick with my original vision. You know, I'm just going to stay in this trade because I'm not allowed to put the trade in during the market hours anyway. So instead of tempting myself to put a trade in before the market opens, way before, I think I have to have my trade in by 8:30 a.m. Eastern time. Otherwise, I could get in trouble. And I don't know if anyone at my firm gets in trouble for that, but I'm pretty much a rule, stick by the rule type of guy. So I didn't want to chance it, and so yeah, I didn't because of that mainly. But otherwise, I probably would have.
Okay. So the next day, right,
Yeah.
it closes, I think, at 71 or 72. So your September calls have gone to, like, let's say $9 or so, maybe $10. And then it goes up, into the 80s, and basically in 2 more days it's in the 90s, right? Or low 90s. So now your September calls are like what?
They're like 20 or $30 or $20-some, I think.
20 and 30. So you have over probably 10 to 15 time gain, right, in a few days, right?
Yeah.
So what are you thinking here? Are you tempted to sell it, or are you just kind of sitting back?
No, this goes back to the support system, reading everyone on the, because like I said, I can't do it intraday, right? So even though I want to intraday, and I go home determined, like, okay, I'm going to put my sell order in tonight to close out my position. Well, number one, I talked to my close friend at work who's in some of these trades with me, and we're kind of reinforcing each other, like, no, this thing's the future, this thing's going to, everything that we talk about in the Tesla Motor forums. And then I go home and I read the Tesla Motor forums, and everyone's like, oh, this thing is going to go to 100, this thing is not going down, so forth. And I just kind of thought it over again. I said, okay, let me let this ride longer. I think it's going to, and every day this happened over and over. It was like an emotional roller coaster. It was like I'd really want to close out of a big gate winner, and then I wouldn't be able to, I wouldn't do it,
Okay, got it. So then Tesla has their offering, and now there's some solid, 90-something base.
Yeah.
And then, it's like it's going up to 110, 115, it goes down. Are you just kind of chilling out and just, hanging still?
Yeah, yeah, pretty much. I mean, same thing, my IRA is fully vested. It's my taxable account at this point that I'm really freaked out about. I think around this point in my taxable account, I tried to, like, sell some 105 calls or something like that, 10 of them, to, like, hedge myself a little bit, but in retrospect, that was that hurt myself, but not a lot. But in my IRA account, I didn't do any of that. I didn't trade at all. I was more focused on my taxable account and just kind of let my IRA account run and see what it does.
Got it. Okay. And then I'm curious, like, okay, so with these 35, because I know probably your taxable account is a little bit more private than the amounts, but in terms of your IRA, these 35 September contracts, you bought them at $2. So let's say that you bought, it was a cost basis of 7,000.
Yeah.
And they're up to, like, let's say 3,000 or $30 each. So that's like, it's about 100,000, right? So 7,000 becomes 100,000. Maybe the stock's at, 100, 110 max,
Yeah.
Probably 100, And so when do you?
You know what? I think I did sell 10 calls. I sold 10 September on May 22nd. I'm sorry, on May 22nd, I sold 10 September 100 calls to lock in some gains for $8.30. So I was really long 25 September 75 calls the rest of the way until the end. But those 10 September 100 calls I sold for September expiration. I pretty much locked in for $25 of the strike difference plus $8 for the premium. So it's like, minus the $2 of the premium 75. So it's like a $32 or $31 gain I locked in for at least 10 of the 35.
10 of them. Okay, got it. So you did.
But the other 25 I let run all the way. I was just looking at my statement.
Okay. So you did 10, kind of a covered call type of or spread. So when did you end up selling these September 75 calls?
Let me see. I think I exercised some of them. I sold some of them, and I exercised some of them just to hold shares. Let me see here. In September 13th, I sold 2 for $88. I sold 8 for $107 on the September 20th. And on September 16th, I think I exercised 5 for 500 shares or something like that. My statement's a little hard to read. I should have done my homework a little better. But around expiration is when I closed out of everything and held on to some shares from that
Okay,
point.
got it. So I'm guessing you sold out of some of the calls, and then you exercised some.
Yep.
So you sold them, let's say about 100. So that's you bought them at $2. So you're
Yeah.
now it's about 50 time gain, right? This
Yeah.
is in September.
And don't forget that 50 time gain is based on maybe a 10 times gain before that from the leaps. So it's a pretty big gain, you know. Or I don't know 10 time, but the leaps
Mm-hmm.
originally I bought for $2 or $3 and I sold them for $8 or no, $15, I'm sorry, to convert to the 75 calls.
Okay, got it. And then so then you exercise, and then what did you do after? I'm guessing so you're holding 500 shares, and anything else in your account after September?
Yeah. So after September, that's where I had a spike. I was looking at my maybe I can get my. Is there a way to share like this a picture from my? I took a
Yeah,
picture.
yeah. If you go to the left, there is a screen share, the green kind of background arrow,
Okay.
third from the top.
Yeah, yeah.
Yeah.
Okay, let me show you the screen here. This is the
Okay.
screen.
All right.
So this is the value of the account.
Okay. Cool.
This is kind of like a snapshot from the beginning of last year to end of February. But you can see in September there it spiked at like plus 15,000% gain, right? On the top left graph there. Yeah. So after that, it was a little bit of blues as the car fires happened and so forth. And then in November is when I ended up loading up on a bunch of those leaps and 1,000 shares. My IRA account still has 1,000 shares of Tesla, but it also has I think 50 of the 250 January 2016 leaps. And so I got them at the right time, and I think those leaps have tripled in value or quadrupled in value since I bought them. And the shares have almost doubled in value, as you guys know, or more than doubled in value, I guess, since November at the low. So I've made a comeback, and it's a pretty nice return for that time period. It's like I had a crystal ball and knew what was going to happen to the price. One of my friends told me or something, but I think a lot of it's luck. I shoot for the stars a lot of times and don't hit it a lot, but this time I did.
Mm-hmm. Okay, cool. Yeah, thanks for that graphic. Actually, it's helpful to see the ups and then the down with the fires, and then
Yeah.
it makes sense. You loading up on the January 16,
Yeah.
250 strike calls. Now your
Yeah.
leverage, as Tesla goes up
Yeah.
tremendously.
Yeah. Yeah. So that's the any other. I mean, that's kind of the story, the summary of it. I'm open to if anyone has questions or if anyone has similar stories, I'd be interested to hear too. Or I mean, I've read about a lot of similar stories already.
Yeah. Okay. So let's go ahead and let's open it up a bit for questions. So you guys saw kind of like some of his general story of the calls and then the ups and downs a bit, but now writing the 2016 leaps. I'm just curious, actually, before opening up for questions, what kind of made you to pull the trigger on the 2016 leaps in November when Tesla was down to like 120 or so?
Yeah, it was like either that or I was thinking the January 2015 leaps, but I was thinking at the time I didn't think Tesla would rebound nearly as fast as it has. I kind of wish I did, but I was kind of thinking about, I felt like I'd been on a real emotional roller coaster for the last 6 or 9 months and been very lucky, and I still had conviction that Tesla would be very good. I just didn't know it would pop as quickly as it did in the last few months, and I felt like, okay, if I get to January 2015 250 leaps, it may not even get there by that time, but I think 2016, once the Model X has been in production for a full year, I think by that time the world will realize how amazing this company is, and will pump the stock price up well above 250. So I just felt like that extra year was important to even though it was an extra like $7 or $8 for the leap contracts, or maybe $8. I don't know. I think I got them for $15 or $16, and I think the 2015s might have been like $5. So it was like triple the price, but I felt like there was a lot less risk in getting the 2 years instead of the 1 year. You never know if the market would have a correction in this next year or what happened, how much longer it would take to rebound. So I just wanted to protect my equity at that point with less of a risky trade.
Got it. Yeah, I noticed if you would have done 2015, but I mean I totally understand how
Yeah.
the risk profile, because at that time it was hard to know when Tesla would recover, if it,
Yeah.
and how fast it could recover. But if you would have done 2015, your account probably would be over 1 million, perhaps.
Probably, yeah.
If you actually did 250,
Yeah,
as
yeah,
strike
yeah, yeah.
January
Could have bought
15.
3 times as many of them. Yeah, yeah,
Exactly.
yeah.
Anyways, but who would have known,
Who would have known?
Yeah, it
Yeah.
recovered so fast. Okay, let's open it up for some questions. What do you guys have for TSLAopt here?
Hey man, how's it going? It's FlexCap. Can you hear
Hey,
me?
how are you? Yeah,
All
yeah.
right. So, oh, your screen's still the chart's still on. That's fine now.
Oh, you can't see me?
No, I can't see your pretty face there. No. No, I was gonna ask. So, in that dip in November when we were all, at least on our forums, kind of freaking out, me, maybe not you, but some of us were. What did you think about the fire risk and the debts that in this town, the debt ceiling stuff was going on? That's what's scared me.
Yeah.
How did you process that in relation to your investment strategy? I mean, how did you kind of process the negative news that was hitting hard at that point?
Yeah, yeah. No, the debt ceiling freaked me out in my taxable account. I think my taxable account had about a 9,500% return or whatnot, which is really amazing, but not as good as the IRA, partly because, I was freaking out in that account a little bit, and I did buy a bunch of these, like, 2-week out puts that were pretty expensive, and they turned into be worthless, but, I was freaked out about it. I didn't close out of any of my positions in my taxable account, probably because I didn't want to realize the tax consequences of such a huge gain, So I was trying to protect those huge gains. I didn't want to have to pay, short-term tax gains. And my IRA account was kind of just like a byproduct of whatever I did in my taxable account. I was kind of doing in my IRA account, but I didn't buy those puts in my IRA account. I just wasn't as focused on managing my IRA account. I kind of knew that long term. I don't know. I just felt like the IRA account. I wasn't as worried about it because I felt like even if it goes down, it's not like I can spend that money anytime soon. I don't know. I just didn't have as much value in making those decisions in my IRA account as I should have probably. But I'm lucky I didn't in retrospect. But I did know that the fires were overblown and that it was just sensationalized by the media and the internet, just like everything is these days. And I kind of realized that whatever Elon was saying, I really believe in Elon Musk. I think he's, this century's Thomas Edison and Henry Ford and, Steve Jobs rolled into one. And so I didn't, when he's saying that the statistics are the statistics that say it's, much safer than a gas car, I believe him and the angle he's coming at it from versus the bears, So I just felt like the fires were overblown and it wasn't going to be a big deal in the long run.
So it sounds like a combination of vision and fear of taxes, which worked in your favor.
Yeah, fear of taxes worked huge in my favor, I'll tell you that.
Yeah. All right. Cool.
Yeah, thanks.
TSLAopt, I'm wondering, did did thinking ahead, like when Tesla was at like 190,
Yeah.
I remember I posted something like if Tesla broke down later on in the future to like in the 130s or lower, and there was 2016 leaps, that would be a great opportunity. Like, did you have any similar thinking? Like, were you kind of expecting or that there could be downward risk, and that you could get in later? Was that part of kind of how you view things?
Yeah, I think it might have been your post or some people's post in there that brought that up. I might have thought about that on my own, but reading everyone's contributions on those forums gives you ideas. Not everyone says something that you agree with, but sometimes you read something and it just hits you. It's like a light bulb in your head. You're like, you know what? That's a good idea. I'm going to wait for that. I'm going to do that. And so I think the seed was planted in my head early on for those 2016 leaps, and some dialogue on that saying, let's just wait another month or two to see what those 2016 leaps price out to be, because I might have been contemplating the 2015 leaps earlier, and I'm glad I waited until the 2016 leaps came out because the price was, lower, and I got in at a better price at that time. But all my equity was tied up in Tesla all the time. I wish, I could have had more. I wish I could have closed out of some positions better than I did before, the stock went down, obviously. But it's like, I've always been very bullish on Tesla, even in the downswings. I just never knew when it was going to go down further. I just never, I wasn't one of those people that tries to go down with, tries to short it or go, close out of positions on a downswing and then enter it into a lower price point. Just because anytime I've ever done that in the past, I've been wrong. So.
Yeah, I have a question for you, Tessa, and that is, what are your current goals, your long-term goals with your portfolio? And maybe before you answer that, just want to congratulate you. And I think your story is, well, my story is very similar to your story, a little bit at a lower scale, though, because I think you're probably pretty close to $1 million already. But yeah. I didn't have an IRA account, so my account is a taxable account with E-Trade. So I have actually never taken any profits, and I think I can see the difference between how you ended up there and where I ended up is that I put a lot more money in, and I think my average is now $50, and I'm holding about 2,000 shares. Well, half of them are shares, the other half are leaps. So that's kind of my balance. But I'm interested in what your goal is, for like the next 3 to 5 years, where you would like to see your portfolio grow to.
Yeah. So my taxable account is like 1.4 million, but if I closed everything out right now, it'd probably be like $900,000 after taxes. So I don't want to do that. I want to hold on to those positions until next September, at least, before I close some of the positions out. And I'm trying to grow my portfolio to be over 10 million with exposure to at least 10,000 shares of Tesla in the long run. That's what I would like. And then I'll feel like I'll have the financial freedom to do a lot of different things with my life, and my wife and I can move wherever we want, and do a lot of different things. So my job I have is very good. I'm happy with it. It's treating me well. So I'm not. I feel like even if Tesla didn't work out for whatever reason, I'd still be doing well. So it's kind of like I'm playing with house money, I feel like, in a way. And it's not really, I'm lucky to have what I have with the Tesla earnings and those two accounts, but I'm not dependent. Our life doesn't depend on it, so I can be a little more risky and hold on to the shares for a long time if I need to. So I have these leaps that are 2 years out, and I have shares. Those are my two core positions. I don't really. I feel like I don't want to go into like options that are just 1 or 2 or 3 months out or 6 months out even anymore, just because I feel like there could be a market correction at any time that takes the whole market down 10 or 20%, and Tesla might go down 30 or 40% if that happens, I feel like. So I don't want to take that risk, so I'm trying to stay at least a couple years out in the horizon. So next year I might even try to roll up my 2016 leaps to 2017 leaps if I feel like the environment's right for that. So yeah, my long-term goal is to try to get exposure to 10,000 shares and try to hold on to. I think in 3 to 5 years the Tesla price could be at $1,000 a share, and I think in 5 to 8 years it could be at 2,000 plus. And the reason I think that is because I equate it to market cap in terms of billions of dollars. I feel like a lot of people talk about share prices. Oh, $1,000 a share is so high, but then you look at the market cap, it's really only a $120 billion market cap company if it goes to $1,000 a share. Google's $1,000 a share, and I think like $300 billion market cap company or something. Apple's $500 or $600 billion market cap. So I think people get overexcited about the high share price, but really the market cap is what I'm focused on, and I think it could be a 200 billion plus market cap company in 5 to 8 years.
Isn't that the size of Toyota right now?
Yeah, but I think the growth. I think you're exactly right. Toyota's around 250 billion market cap, something like that. But I think one of my theses on Tesla is that you have all these. They're delivering. There's 600 new deliveries a week right now, conservatively, and I would say they're all high net worth people. I'm probably one of the poorest people who bought a Tesla, and I invested a lot into it. And of all these high net worth people that are getting Teslas every week, I would say at least half of them are investing themselves in Tesla or telling their broker, to buy some Tesla in their account. They don't care what the price; they just want it for the long term because they think it's the next best thing, And I think as deliveries ramp up later on this year, you could see more of that effect. And I think this kind of retail effect is going to be strong and keep Tesla's tide high. Keep the PE ratio, where people are going to say it's overvalued or very expensive for a long, long time to come because of that, I think. And if the Model X turns out to be as amazing of a piece of technology as the Model S, that's where my conviction will be to hold on to my long-term goals of staying with the Tesla shares and the leaps for a lot longer, because hopefully I'll be one of I'm one of the first 4,000 registrations for the Model X, so I hope to get it within the first quarter. They produce it, so that way I can kind of verify my conviction in Tesla. If it's not as great of a car as the Model S, then I'm going to sell out of some shares and hold some shares, but I'm not going to be as fully vested.
In any case, congratulations. That's an amazing win streak there.
Oh, thanks. Yeah. No, it's if I stuck to my original plan, I'd probably be at $10 million now. But my original plan was that I was going to keep rolling up and rolling up and rolling up. So when the 75s got in the money, I was going to roll those up to like $100 or $120 calls, and I never did that. Once I chickened out. I was going to keep doing that. And kind of like I did with the Giants when I bet that $100 and I kept double down into $10,000. I was going to do that with this $2,800 IRA account. I just chickened out, and it'd be like a $10 million IRA account if I did. But what can you do?
Well, I tried to play too many short options in Q3 and lost a lot, just like my Redskins. So yeah.
Yeah, that's too bad. Yeah.
TSLAopt, I'm curious. I remember. I think I saw a post that you're saying that your long-term plan. This is back. I don't know, several months, but wait until if there's a competitor that comes out with a car that's similarly priced as the Gen 3 with comparable performance, then you will, I guess, sell shares. I'm not sure how much. What was your thinking behind that?
Yeah, that goes along with the Model X as well. So, I'm sure no one's going to, as far as we can tell, we know no competitors coming out with anything comparable in the next year, I would say, before the Model X. But if the Model X, comes out, after the Model X, if another competitor comes out and I personally test drive the car, and I'm going to personally test drive every new electric car out there, that's my goal. And if I can personally test drive one that I think is equal to or comparable to the latest Tesla product, that's the sign for me to, close out of a lot of my shares or a large part of my position. I'd still hold on to some of it long term. Maybe I would just close out a half or something, but until that happens, I'm going to stay, all in on those accounts with Tesla like I have been. I'm going to stick with the winner. Let the winners run is what I remember saying from I used to day trade years ago, and that's what they used to say, and I never listened to it, but this time I am for this one.
So it sounds like you're focused on in your analysis of the company and the stock. You're focused a lot on the product. I share that with you. That's I think it's a good strategy. The product is sort of tells the story. Do you use anything else? Do you do deep fundamental analysis? Do you do technical charting? Or do you just sort of focus on the? Do you do any of that or not?
I do a little bit, but that's what really I come to the Tesla Motor forums for, is to get it from you guys, that other viewpoint.
We've got Dave for that, right?
Yeah, exactly. If I start seeing Dave writing like conservative posts or negative, like, uh-oh, guys, I think it's too high, then I'm going to be thinking twice about my plan. But yeah, most of it has been on product. Just like when the iPhone came out, I wish I had bought Apple stock at that time, even though it had already gone up a lot. And I think this is like an Apple iPhone type product where it's just going to revolutionize the car industry. And until those Samsung phones come about, I'm not going to sell out of this, the equivalent of the Samsung phones on the iPhone. Until that comes out with the Tesla car competitor, I don't think I'm going to sell out of it.
That makes sense.
Yeah, and I'm confident in the senior management. I'm very confident in Elon Musk and those guys. He's a tremendous leader, and I think he can make anything happen pretty much, and I don't see any reason why he would let the company fail at this point. They've got past their darkest days. They're profitable. There's no way there's no way they're failing. The only way they fail is, I think, if a competitor comes out somehow with a competitive product. And Nissan might be, according to JB Straubel, I met him at a rally, and he thinks, I asked him point blank, who do you think the closest competitor is? And he kind of chuckled and said, no one's really putting into seriousness, but maybe if anyone, Nissan, but they're still a ways off. So that's who I'd have my eye on first, I guess, because he probably knows better than me.
Yeah, I mean, I agree with you. I tend to think the competitive advantage is so large, so much larger than most of the market sort of processes, and I could be way wrong, but I mean, you'd have to hire from Silicon Valley talent, I think, to replicate the car, and anybody who's spent time with it really starts to get that. And if you're a software guy, you sort of think about those things too. But it would just take years and a cultural shift in car companies that maybe doesn't even exist. So product is very important to me too.
Yeah, I think so.
Actually, I don't think that it's a Silicon Valley thing, actually, for Nissan anyways. For me, it's about battery chemistry. And so, and chassis design, and just going all in on the concept. And to me, Tesla has so many chicken egg problems to solve. The electric vehicles, electrification has so many chicken egg problems that Tesla decided we're just going to take them all on. Like, we're going to do it. We're going to do every chicken egg problem. You can't get a really large battery until you choose to do state of the art and you choose to do a big heavy car, which is what they chose to do. You can't get really high speed charging until you have a really big battery. You can't have really big a lot of charging stations. People won't buy the car until there's a lot of charging stations. So they said, well, we will do both at the same time. You just take each and every single one of these things. I don't think any one of them is a particularly large moat, but you add them all up together, and they're the only one that said, okay, we're going to do them all at the same time so that we can grow this out. And so to me, we will see that. I think that the number one sign is battery factories take a long time to build, and they have to telegraph the chemistry that comes with it. And so when we see that their Tennessee battery plant is changing over to NMC, and we start seeing what kind of batteries they're going to build out of that Tennessee plant, that might be a sign that they're going to do something different. Right now they're on lithium manganese, which is the specific energy is so much lower. They can't build a Model S with the battery chemistry that they have.
That's Nissan, you mean, right?
Right.
Yeah.
Right.
Yeah. That's what I'm going to be going to the Tesla Motor forums for continually, is to get your viewpoint, because you know the battery chemistry more than I do. There's other people on there that know it very well, so I'll listen to all your guys' input as that stuff's happening to get, that makes a part in all my decisions. So I wouldn't have done any of this without you guys. It sounds corny, but it's true. Like, if you guys didn't have this expertise that I trusted, I wouldn't have had the confidence to stick with my decisions that I did, I think.
All right, going back to some of your perspectives and trades. Do you have what's your view on taxes? Like, do you regret kind of like, with your taxable account, like, do you regret making some more conservative choices, or do you think it's just what you had to do based off of the short-term capital gains?
I had to do it because my broker made Tesla non-marginable. So what I did was I had all these 75 calls in the money that were, in September expiring for, they were $150 plus, the stock was at the time. So I took assignment on all those calls. So I didn't want to pay crazy long-term, short-term gains taxes on that. And within a few weeks after that, my broker, right when Tesla started going down, my broker said, okay, Tesla, Facebook, all these other stocks that are, high flyers that have appreciated more than 100% in the last year now are 100% marginable, and we're going to make it go as of Friday or something. They gave me like a couple days warning, and so I was like, holy crap, now I got to sell out of these shares, and so I had to sell out of some shares really carefully. I created a terrible tax consequence for myself, and now I have to borrow money. It's ironic, I have to borrow money from my insurance company, USAA, to pay off my my long-term gains taxes that I created some long-term gains instead of short-term gains taxes for myself by selling the rest of the January 40 leaps that I had still left in my taxable account. But taxes are, I think given the circumstances I had with this and my broker, I think I did the best I probably could. But looking back, I would not have suspected that they were going to raise the margin to 100% out of the blue like that. And now I just have to kind of have to be very careful with going forward, not to use leverage in my taxable account.
Yeah, I heard that was with Interactive Brokers, right?
Yeah. Uh-huh.
Yeah, I heard. I was doing some research actually before that time, like thinking of opening up an account with them, and then I was reading like back in 2008, 2009, they actually did that as well. They basically froze the margin, requirements for a lot of stocks, and that hurt quite a few people. But
yeah, they're very conservative. Their management, they think that the world could end at any time. So they're very, they're risk averse, and that's understandable. But maybe I might transfer my account to like somewhere else just to get margin treatment. That's what I was thinking about doing to pay my taxes, is transfer my account to Ameritrade to borrow against it to pay my taxes. But in the end, I decided to keep it at Interactive Brokers. I don't know.
All right, TSLAopt, do you have I'm curious, like, what was your previous type of options trading experience? Like, did you make out some good trades before, or did you lose a lot of money before, or kind of like,
Yeah, I'm just putting my plug in. It's like, from before, I mean, in my financial profession, a lot of the people I work with, not the people I work with, the people I service trade a lot of options very actively, and like a requirement of my job is to really understand options very well. And so I'd done some options here and there. I'd played with Apple options once in a while, trying to time an earnings date or whatever. It never worked out. And I just kind of decided I don't do anything too advanced. I don't do these bull call spreads or straddles or iron condors or anything like that. Those are for some people, but for me, I just feel like I like to use. I have a direction that I think a stock is going to go. I don't know how far it's going to go that direction. I just think it's going to go a direction, and I want to get leverage on that by buying calls, single leg options, calls, or if I think it's going down, I'll buy puts. But I haven't done that side yet. But just a few stocks here and there, I'll pick out and just buy single leg calls. And the leaps I think are great value because I feel like the shorter the time duration, the more of a gamble it is. If you think a stock is going to go up 2 years or a year is a very long time in today's markets. A month is not long enough to know. Macroeconomics could really mess you up on that, and it's a gamble. Whereas I felt like leaps are a better long-term play. So my experience isn't great, but it's good enough for sure to know what I'm doing when I'm doing executing the trades or getting into a position or out of a position, I would say. But
cool.
Yeah. So Dave, what would you say your experience is with the options? I'm just like, have you used them before? Have you used just stock primarily until the Tesla stuff, or?
Yeah, my whole approach is like I went in with stock with basically like 80-90% of our liquid assets, and back in 2012, I thought it was going to pop at any moment, especially with the Car of the Year, the Motor Trend Car of the Year award. I'm like, oh my gosh, like and they're ramping up their factory, it's still at $30 a stock, It's like, how is it going to stay at $30? And so I remember back in November, I'm like, I wrote on Tesla Motors Club, I'm like, hey, I finished all my purchases because I was scared, that it was going to pop really soon. And then by the springtime, I was like, this thing isn't moving. But I'm like, I kept on telling my wife, anything under $100 for Tesla is a bargain of a lifetime, right? I'm like, where can we find more money? I'm like, who can we borrow from? I was even thinking like, can I talk to some billionaires or millionaires that I could like, borrow, make a fund or something, right? But basically, I didn't know too much about options, actually. I never really had experience. So I actually spent my pre-Q1 time getting some family members on board where I actually guaranteed all of their losses, all of their possible losses for 5 years for the investment amount that they would put into Tesla. And because otherwise I felt like it would be too risky for them just to, especially kind of older retired people. And so the week before Q1, I kind of finished kind of this big guarantee and got in some family members with some pretty large purchases for Tesla. And then and I was thinking about options. I'm like, looking over the pricing, saying this thing's gonna pop, over 100 this year. We should get in. And so I'm talking to my wife, and then looking over options pricing, and then thinking, okay, but we just made this big guarantee, with the family, so it's like we were already liable. And then what happened was Q1 happened, and I'm like telling my wife, this isn't going to stay under 100 very long, I'm like, and so the next morning we wake up at 4 a.m. and we're like, what do we do? This is like, and so we start talking about options. We're like, okay, we got to get in, and but we didn't even have an options account, open yet. It was all stock, and so we actually, my wife started calling East Coast option, like places, like all of the brokers, calling them saying, can you open an account this morning and can we trade this morning, option? And like most of them were like, no, it usually takes like a day or two. And then we finally found 2 places, that said they could probably do it, And so we end up going to the bank at 9 a.m. right when it opens.
Oh, wow.
We basically put in all of our remaining cash, like everything we had saved up, like a house that was just kind of emergency funds, and we stuck it into this options account. And then we come home, and at 10 o'clock our account is enabled, 10 a.m. And we're like, oh my gosh, that was just crazy. And Tesla's still around 70, right? I'm like, I thought this could pop anytime into the 80s or 90s. And so I'm like, I'm telling my wife, I'm like, just buy anything, But we had different strikes and different, scenarios laid out. And so we got a lot of like 2015 80, 85, 90 calls, and then we also bought some September 80, January 14, December 13, a bunch of different calls and stuff. But then we finished our purchases, and then as the stock rose, we're just like, we're so tempted. We started to sell eBay stuff, and like, well, how many more options can we get? I kept on telling my wife, under $100, this is a bargain of a lifetime. So anyways, and then into the hundreds, we started to play some ups and downs, some short-term trading, but the bulk of our purchases were, under 100, just kind of like more long-term,
Sure.
So, but after that, it's been a lot of just kind of, I'm trying to gain some experience with short-term trading, and also just like, I think with you, TSLAopt, like you had some background with options, you understood them, you understood leverage, but you also understood the fundamentals behind Tesla as well. And you knew that the car was awesome. And the company was going to grow like crazy, and so it just seemed like a perfect opportunity for you to pull all of that together and just say, okay, let's do it. Make some bets.
Definitely. So, what about you, Flux? When did you get into the options?
Yeah, it's funny. I got burned with my family. Sort of investing with a club in the 90s. That's going to date me. So with some not personally in options, but with some derivatives, some hedge funds that we were like participating in that were just, doing dumb stuff. I mean, that was, and then I basically pulled us all. I got really conservative, and my similar to Dave, I think older generations, they're very conservative. I try to balance their risks aversion to their goals. So we pulled out the cash before the market crash of 08. I pulled most of our family's assets out of the market and that got me some cred. So
Yeah.
a limited amount, I guess.
That's good.
And then basically, I just I'm a car guy. I have been for life, and I used to drive an Evo, and before that Hondas, and race them a little bit. But when I sat in that Tesla, I just, like you said, I saw the future, and it was kind of a childhood dream. I also happen to be a pretty big environmentalist, but which didn't fit well to date with the car guy thing. But and the product just blew me away, and I've been blown away by products before. So I literally went home after a test drive in February of 2013, so later than you guys, and begged my entire family to just put everything they had into Tesla. And at the time, I knew they wouldn't do anything with options, probably because we'd gotten burned in the past. But and then last year, I sort of dipped in personally as the stock just made a fortune for them. I dipped in personally to the options, and I went big, in Q3 like a lot of people did, and it just was rough. But I stuck with it. I have my leaps. I'm in the sleepy mindset, so I don't really let even short-term tax gains influence my trades to the degree I can. But you combine the short squeeze, which was originally like Love B2B, isn't that the name of the guy on the forums that was talking about the naked short last year? You combine that with the product, with the fundamentals, and I was pretty confident it's just going up. So and I made my big windfall with Adam Jonas's announcement, which I posted on the forums. That was
that was nice. Yeah, I saw that. That was a big, nice gain you had there. That's good.
Yeah, it was quite a day for me. The best day of my life investing. I think the family went, whoa, all right, well, maybe we'll let him do some options in our account too. So
we'll see. You mentioned something about short interest. That's another thing. Is I'm really fascinated to know what the short interest is going to be on Tuesday. After the close, because I feel like when the short interest is high, I feel like that's it's almost like a safety net. I feel like that the stock isn't going to go too low because there's so many shorts that have to cover at some point. But when the short interest is low, like $20 million or 20 million shares or less, then it's like, uh-oh, the stock could correct 20 or 30 points at any time with more new shorts jumping in at once. But when the short interest is over 30 million shares, I feel like there's not too many new shorts can come in at once, and a lot of shorts are going to have to cover on some bad news. So I hope the short interest is still high on Tuesday afternoon. We'll see.
Yeah, I'm also looking for that too. I was actually surprised the last short interest was pretty high up there, higher than I expected actually.
It did seem really high. I think we have, with this stock, we have so many emotions. I mean, obviously we have positive emotions, but there's a lot of negative emotions, and people trade on that. Dave posted a link to options trader, Dave, what's the name of the guy? John
Carter.
John Carter, and his one of the videos where you watch him sort of trade, and he's like, I'm providing liquidity to the shorts right now. He's like sitting there making money, providing liquidity. I thought that was the coolest. I mean, obviously, I don't have that level of skill to be able to time like he did. But that was really educational for me to think about him having that in mind in real time. Man, that's incredible. But So.
TSLAopt, I'm wondering, like, are you kind of like a car guy, hobbyist at all? Were you test driving other cars and stuff?
I'm a gadget guy. I always like new technology. I mean, I did have the Subaru WRX when that, like a year or two after that came out, and that was like a big thing for young guys to get or whatever. But other than that, I haven't really been a huge car guy. I always wanted a nice car, like a BMW 3 Series I had once that was like brand new, and then I moved into New York City, and then got rid of my car or whatever, and got married, and then I was not a car guy anymore once I was married, So I was always into like new technology though. Like I always wanted the newest iPhone. I always wanted, when Google Glass goes on sale to consumers, I'll probably be one of the first people to get that, or the iPad, the Apple Watch when that comes out, I'll want to get that. So the fact that this was like a new piece of technology, but it was like a new car at the same time, I think, just made me more drawn to like the interface. When I first saw the car and that department store that it was visiting in 2011, the beta version or the alpha version. When I saw that touchscreen, that 17-inch touchscreen, I think I was in love with that more than I hadn't even driven the car. I was like, I just got to get this car. This is amazing. I want that touchscreen, you know. And then I drove the car, and I was like, wow, this is amazing. It was like I had super high expectations going into that test drive, and it beat my expectations. It's like when you go to a movie with super high expectations, you never see a movie that meets your expectations. But this car like superseded my super high expectations.
Yeah. When was your test drive?
It was in the summer tour, August. It was in August of, or maybe mid-July or mid-August of 2012.
Okay.
So,
yeah, I had super high expectations going into a test drive. Like I was trying to test drive it, but then my local San Diego store didn't have any test drives for non-reservation holders, and so I actually emailed Elon Musk. This is back in August. I'm like, hey, I need to test drive your car. What's going on? So the regional service manager calls me up and says, okay, we'll try to get your test drive. You know, and then, a few months later, it didn't happen until early November. But I remember telling my wife, I'm like, man, I have super high expectations for this car, and if it beats my expectations, because I was actually getting into cars as a hobby, and I was driving a bunch of Porsches and M3s and just trying to I was really sensitive to the handling of these cars. And so I'm like, okay, if I test drive this Model S and it blows me away, then we're gonna go all in, you know. And both of us, we just after test driving it, we're like, oh my gosh, this is insane, you know. Yeah. But the test drive definitely is a huge selling point.
Yeah, for me, living in the Bay Area, I was fortunate enough to be able to participate in the October factory event, where they did test drives for people who had the reservations, and I think this was October 2011, right? Where they had the betas.
Wow, that's awesome.
It was a great event. Elon Musk drove up on the podium in a Model S and started talking about the mission of the company, and that you are all his early supporters. And that did it. At that time, I already had the reservation, but then I knew, this was going to be big, and I could hardly wait.
Yeah, that's great.
In terms of that, I talked to Jerome Guillen, and he said that probably because of all the things that they have on their plate, they're not going to be doing any event like that for the Model X. Just kind of thought I'd throw the data point out there, but I'm sure they'll probably do some type of test drives, but it doesn't sound like they're planning on doing a factory event because of the distraction it might potentially cause with building over there.
There's 30,000 people trying to descend on the factory at once.
Yeah.
Seriously. We got to build cars.
Yeah, I know.
I think the fascinating thing about that video, that day trading video, where he has he's making $1 million in a day, is I realized that the skill set for long-term trading and the skill set for what he did during that day is very different.
Indeed.
And I'm actually really lousy at the intraday trade. And so coming out of the NAIA conference, the North American Auto Show, it was fascinating is that he made his $1 million after I pretty much already got out of the positions I wanted to get out of. Mm-hmm. So in other words, I had already gotten, I had the big pop at first, and I thought that was it. And I got out of my short-term stuff, and he had just gotten started, and he made $1 million after me.
Yeah.
Which is just fascinating to me that and especially coming off the Q3 conference call where I lost a lot on short-term, is that he didn't even pre-set up. Like it wasn't like he entered the trade after what it seemed like a lot of it was done. And I think in the past, from the North American Auto Show up until the Gigafactory announcement, I think we actually may have seen 4 or 5 different short squeezes, if you really want to tease it apart, in between, where there was actually a reinforcing funnel effect going on, as the shorts were saying there's no way this is real, and they put more money into short. And so we actually saw an ongoing short squeeze as they poured more money in, which was just fascinating over the last few weeks.
It is. It's totally fascinating. It's like the amplification of the reverse effect when they get squeezed is higher than the pull down. It seems anyway. I don't know.
Yeah, it's crazy how many shorts there are in there that have never test driven the car. I'm amazed by that. You talk to so many shorts on different forums, and so many of them have not test driven the car, and they're still determined to short it. It just behooves me.
I think that is our advantage until they do. I feel like I hate to say it, but that's going to keep making me money until if I looked at this company purely in fundamental analysis, if last year in October we were talking about Damodaran's spreadsheet, and his cost of capital and all that, and I mean, if you just look at it with that, you're missing a growth company on the trajectory of Amazon, eBay, Google in the early stages, and if you can't try the product and you can't experience that, you can't invest wisely, I think. In this company, in any growth company in a way. That's the first thing as a venture capitalist, people that I trade with, it's people first and product second. You got to have the management, which I think this company obviously has the gift of that in Elon Musk, and then the product. And when you invest without knowing those two things on either end of the trade, you're doing yourself a disservice, I think.
Yeah. With TSLAopt, your kind of valuation kind of predictions. I actually I think of the company also in terms of valuation, not in terms of stock price, and that kind of helps me. That helped me understand why Tesla, I guess, wouldn't stay under 15 billion that long. I felt like 10 or 15 billion, because if you just do the numbers, if they're successful, the market size and how many cars that they can sell is just immense. It doesn't support a $10 billion market cap valuation. But it's interesting too, because whether Tesla can be a $100 billion or $200 billion market cap company by when, I know there are a lot of skeptics, and I try to be conservative in my own personal price targets, because I kind of am kind of conservative in terms of I don't want to shoot too far out and be hit by some market downturn or recession. But I try not to cap my valuations too much, because there's this factor where Tesla can become kind of like an Apple for cars, where what Apple did was, before Apple, the cell phone industry wasn't making very high margin. It wasn't a very sexy industry. So if you took all of the market cap of all these companies, I mean, sure, it amounted to something, but their margins and profit weren't crazy, good.
Yeah.
But when Apple came in, they basically sexified the whole industry, with their high margins, 40%, these selling these phones for $600, $700, $800, right? And so what Tesla has, their opportunity, in my opinion, is not just to sell a lot of cars equal to GM or Toyota and have the same valuation as GM or Toyota. That's not the potential of Tesla here. The potential of Tesla is to sell as many cars or more than these guys, but to do it in a much more profitable manner, right? And that's what's going to cause potentially, the eventual market cap to be much higher, in my opinion, long term than Toyota is right now. But the flip side, the risk factor is this is kind of a slow motion thing, where it's not going to happen overnight in 1 or 2 years. So that's kind of the other side. It's kind of a long-term trend where Tesla's growing and growing. They're going to sexify the industry with their large profit margins, but it's going to take time. But when people realize it, they're going to factor that into the market cap. And so, you'd think usually the market is pretty much, they forecast ahead. And so I would lean toward the market actually pricing in that sexiness that Tesla can bring with high profit margins earlier than later, Unless there's a market kind of recession downturn where the whole sentiment of the market just changes, and people aren't going to price in that much.
No, I think that makes sense 100%. I mean, I think there's a lot of things they have going for them with that sexiness and the high margins, and then who knows with the energy storage how that could happen, or there's a lot of wild cards out there left to be unturned, I think. So it could really, like you said, this company is going to be priced for the future success, and as it becomes more apparent that the future is very successful for Tesla, it's going to be even more wildly overvalued. That's what the skeptics are going to say. And so this stock, I really, I was telling people last year, I think it'll go to $200, by the end of 2013, and I mean 2014, and it was $200 by the beginning of January or middle of January or whatever. But I tell people 2 to 3 years from now it'll be at $500, but it could be at $500 by the end of this year. I mean, I think there's so many things in its favor. It's like the perfect storm. I really think I'll probably retire in 5 years from this Tesla investment. That's what I really think, and that probably means it's going to be sooner. But who knows?
May that be so.
Yeah,
That would be wonderful.
Yeah. I'm a little bit I take kind of I have this weird thing where I can while it's exuberant, I can kind of process all the risks or a lot of the risks, and when it's really depressed, I can kind of see the potential a lot. But as the exuberance is we're kind of in an exuberant period, and part of how I see it is exuberance can last a very, very long time, especially if there isn't a downward catalyst of some sort. And so I don't try to fight the exuberance. I'm not going to say, oh, Tesla's overvalued, I'm going to short it per se, because it could last a while. But there is a risk, inherent risk, when you're in a period of exuberance, because you're kind of in the upward type of range of what people are going to be giving for the stock. And there is a lot of room to fall in the event of a series of maybe a few negative catalysts. And that's where I kind of like to take the long-term type of view, where with stock or long-dated options, I'm able to kind of hold out the any possible downturns, and ride it back up. And so that's kind of my conservativeness comes into play as well there.
Yeah, no, that's good. I mean, that's what I'm doing now too with the 2016 Leafs and the shares. Just I'm playing it safe for my retirement now, as opposed to trying to make my account be another 10-bagger this year, where I could lose it all. So I'm pretty confident that, just like you said, the volatility is going to stay there, but in the long run, a year from now or 2 years from now, it's going to be a lot higher than where it is now.
Yeah, something you said, both you guys. I mean, I think you're right about exuberance and about this particular company having a hold strategy is right. But two things come to mind for me there. One is, you probably know this, TSLAopt. I mean, traders and analysts do not forecast beyond 5 years I mean, they just don't factor in car sales in 2019 very heavily at this point, because and that's just statistically and mathematically, you can't predict not so much the company's performance, even if you could perfectly, but the world's performance. The sort of global economic situation 5 years ago today, who could have predicted where we are now? So I think that means that you have to be a kind of investor that is not, sort of a fundamentals-based investor to invest in a company like this and see $1,000 a share, or the according market cap as viable. On the flip side of that, I get nervous about a market correction. I think it's coming. I don't think the Fed is going to taper. Anytime like this quarter, next quarter. I don't even think it's going to happen. Maybe next year, because unemployment is the key for them. But when that happens, 10%, 20% overall market correction. And I think we see an outsized correction in that, because we're a momentum stock. Somebody said 30-40%. That's viable. So positioning yourself to survive that and keep and stay long. That's something I think a lot about. I don't know whether you guys think about how to kind of profit from the rise while still kind of preserving that core. Whether it's share, I mean, do you hold shares, or are you all options, or do you have a mix? for example.
Yeah.
For example.
For me, I have a mix right now. I have you know, a few thousand shares, and then like half my money is in shares, and half of it is the Tesla Leaps, or maybe a little more in the Tesla Leaps now from the recent rise in price. But yeah, that's my core holdings I'm sticking with now. And I did buy some right before I took an interesting strategy right before the Detroit Auto Show, when I saw some rumor or some news leaked out that they might try to unveil the Model E at the following year's Detroit Auto Show, although that was like unofficial, and they quickly, PR person said, no, that's not necessarily true. It was like a management figure at Tesla that mentioned that. I think it was Franz Holzen or something in some German newspaper in December said something about that. So in January, around January 10th or something like that, I bought just like 10 or I bought 15 of the January 2015 $300 leaps for like $4, and those are up to like $20 now. So that was a nice investment. But I bought them so that I could hold them for a full year and then decide right before that auto show if I want to sell them for long-term gains or hold on to them to see if there's a nice spike right after the auto show, because they expire like January 20th, and I looked at the date, and the auto show is like the January 16th to the 19th. So the Model E will be unveiled, if it is that auto show, it'll be unveiled right before expiration of those options. So it's kind of a nice, that's the shortest term play I've taken other than my leaps and my my stock at this point. But that's a year, yeah.
Cool. So you're talking about 2015 unveiling of the Gen 3?
Yeah.
Wow,
Does anyone else remember seeing that quote from Van?
Yeah. Actually, it was a German newspaper, and it was actually one of the things. Like, I had a bunch of 2015 January 15 leaps I bought early on, and I did also notice the calendar. Like, they expire like January 20th, and the auto show is like the 17th. So,
Yeah.
so it's like pretty nice.
Perfect play. Yeah.
Exactly.
Nice 3-day buffer.
Yeah, I was kind of like back in November, when it was down to like 120, I was I kind of like was like spending many days trying to figure out how I could leverage more to add at that time. And because one of the issues is we had spent all of our money with stock and leaps, and we were playing around with some short-term stuff, but a lot of our short-term stuff was to pay off some margin that we had already taken out. And so back in November and December, I was like, okay, we could sell, but then actually, like the long-term capital gains, if it was 15%, I would have sold everything and gone into 2016 leaps.
Yeah.
But when I was calculating it out, with California state tax and our income tax bracket, our long-term capital gains, these are shares and stuff held over a year, was like 37%. I was like, oh my gosh! I'm like, how can you take that, And then it's just like, so I decided we're gonna hold our January 15.
You should move to Texas just for a few months or something.
Yeah, that's what Sleepyhead keeps on telling me. And my wife keeps on like saying, should we move to Texas? She's looking at like houses in Texas nowadays.
Yeah.
But you have to be. I think it has to be there a year. You have to hold a year residence in the other state.
Okay. Wow.
We can just all move into Sleepy's house. I'm sure he wouldn't mind. He and his wife.
Yeah.
But in terms,
go ahead.
Maybe to help you out, I don't know. This is kind of what I do sometimes, and from a cash management standpoint, is I just have a lot of open lines of credits on some credit cards. There's inherent risk in it if the position moves the other way, but those cash advances where I always seem to get offers of like those 0% for 12 months or 2 years at like 2% or 4% transaction fee.
Yeah,
so
that's a great idea.
If I run into a tax issue, I'll just write a check if I'm confident that the position's gonna do better than a couple percent. So just something to keep in mind.
Definitely.
That's a good tip, actually. I have one more question, and talking about Sleepyhead, do you, Tesla, invest in any of the solar offerings like Solar City or other ones?
Yeah, I do have a little bit of Solar City. I feel like I've researched Tesla so much as like a part-time job to me that I feel like I know a lot about the company and the stock and the management and the product. As far as solar companies, I don't feel like I've invested as much time. So I really just kind of like have taken a few flyers on a couple SolarCity things just from what I've seen on the forums. I think I bought some of the JKS when it was like $34, a few months ago, and it's gone up and down. It's kind of around there now, so it's fine. But just a few hundred shares, nothing major. And then the SolarCity, I've had a few hundred shares or a few options in that turned into shares for over a year, just because I felt like it was like another Elon Musk company and just bought a few contracts, nothing major. But yeah, I mean, I think that solar is a big thing, and I just don't know. I haven't had enough time to invest my own research into it as much or read about it as much. What about you guys? Do you guys have any solar favorites?
I mean, I can't take credit for. I knew about solar as a dream, but I mean, I think Sleepy was the one that sort of opened my mind to the Chinese solars, and on the last call we talked about SolarCity, and Dave is the guru here and the believer here, but I'm sort of in the camp of I don't understand, like you say, it's like a part-time job to understand Tesla, and I don't have the same level of depth in SolarCity's model, and but Dave does. Maybe he can talk about it.
I mean, I'm not an expert. I'm just a huge fan of SolarCity. I'm actually like, Chinese solars are cool, but yeah, to me, SolarCity is going to be the big winner. They're just on a different management level, I think, and their business model. I love. I mean, they're just relentless with their costs. But it's interesting though, because like the way I view Tesla and SolarCity, I have like 90% Tesla, 10% SolarCity or so, but it's hard for me to get big into a company that I'm not like totally like I understand their product, and I'm in touch with the customers. I think with Tesla, it's like I could read how people are liking their Model S, what they don't like about the Model S, what they like about other cars or this car. I could read about new people coming into like the buying purchase, what their decision-making process is. Like you have a pulse on the quality control, like are the cars, having problems right now? Are they fixing them? It's kind of like one of those opportunities where it's like you have this huge fan base or customers that are posting stuff and crowdsourcing their whole experiences. So you can actually be in continuous touch with the customer experience, and you can gauge like how happy people are with their product, and it's kind of like with solar companies, it's kind of tough to do that, actually with a lot of companies, it's like how happy are the customers with solar panels,
absolutely.
And like with enterprise companies, enterprise software, I guess if you're into that field, you might know a bit, but it's like, for me, I feel with Tesla, we're at equal footing with the analysts in terms of information access, because we know
better footing, actually.
Yeah, exactly, right? Because like, as much time that we want to invest into Tesla, we can find out information from people who are buying the product. And to me, that's like, I mean, that's the key thing. I mean, I agree with like, TSLAopt and FlexCap here. I mean, it's all about the product. It's the company that makes the stellar product. And that stellar product, if it's beyond kind of like anything the competition can compete with, people are going to buy that product. That's going to lead to revenue and good margins and profit, which is going to lead to a stock price increase. And so it all is about the product, And that's where it's like with Tesla as investors, it's like, this is fantastic, We have a product where the experience is democratized. It's crowdsourced. We have access to it as much as anyone else does in the world. And it's like, wow, that's to me, this is a fantastic opportunity. Yeah,
and just think about all the very wealthy Chinese people that are going to be getting Teslas soon are going to be saying the same thing that we're saying, buying the stock at $250 or $300, driving the price up even further as they deliver to, all the wealthy people all over the world, Japan, China, UK, the rest of Europe. I think that's going to keep driving the price up and keep frustrating the shorts and causing more periodic short squeezes, and it's just going to, I feel like it's going to be a vicious cycle for those shorts and for a happy cycle for us longs,
Yeah, like another way, also the way I look at it is every quarter that Tesla kind of passes with better results. Like, like with, for example, last year is like gross margin improvements every quarter, shipment improvements and all this stuff. It's like what happens is the company actually gets stronger financially and in terms of its long-term prospects. Demand starts to increase a bit. So if you notice, if you track all the quarters, the past several quarters, it's like demand has been inching up. Tesla's becoming more confident, forecasting demand. Like, they're saying like Europe and Asia is going to be double United States. But several months ago, they weren't that confident to say that, And several months ago, Tesla wasn't reaching 25% gross margin. And so what you have is every quarter that goes by, the company gets that much stronger, The revenues grow a little bit. And what happens is that gets reflected. The stock price is volatile short-term wise, It's going to go up and down. But they're kind of like the base value of the stock. And I kind of track this base value of what a value investor would give, like a Warren Buffett would give for Tesla if like everyone was scared out of their mind and everyone was fleeing the stock. What would a guy like Warren Buffett give for Tesla based upon its like base value on the stock, right? Every quarter, that value is increasing, And that
so what's your current value?
Personally, I'm looking at kind of the base value of Tesla. I'm looking at kind of a 100 to 130 right now that a Warren Buffett would give when all of the other investors are just fleeing the stock, Like just based off of pure revenue, multiple numbers. I'm not saying Warren Buffett himself, but there are people like that who think like him and who have lots of capital at hand. Personally, I think that's what kind of saved Tesla this last dip around 120. It's these value investors come in where they're not so much scared off by the sentiment. They're looking purely at the numbers, the multiples, the revenue, and they're saying this is a crazy deal. We're going to get in. And I consider that kind of like the base value of Tesla. And every quarter that's going to go up. By the time Gen 3 comes out, that base value, I think, even though the stock might be trading $500-$600 or more, the base value will be trending up where it might be $300-$400. And I'm happy with that because even in a recession, I think the stock, even in like a 2008, type of recession or Great Recession, there's some type of base value that eventually the stock kind of like corrects toward, even in a difficult scenario. And so I kind of like personally, that's how I track my Tesla assets. I track them based off of a base value. And so I keep on telling like some other, like my family members who have like a large portion of their assets in Tesla because of our guarantee of them. I keep on telling them, don't look at the current stock price to value your assets because it's going to be up and down. I give them a base value and actually show them a chart. And I say, just track this value every quarter and base your assets off of this value.
Interesting.
Yeah.
Now, does anyone try to play the volatility by using protected puts or covered calls to try to, your base position is stock and long-term options, but it's going to go down, it's going to go back up, it's going to go down. Play the other side.
Not me. That's too tricky for me. It's I've been burned too much trying to do that. I mean, sometimes I get it right, sometimes I get it wrong. It's just it's not my specialty. But maybe it sounds like I think some other people on here probably. I know Sleepy's done that a lot and been successful. I'm not sure about the rest of you guys. I think you guys have tried it too.
Yeah, I mean, what I kind of got into it trying to pay off some margin actually, because there was a Goldman Sachs dip to like 108, 105 several months ago, and I bought a bunch of calls on margin at that time, and I'm like, okay, I need to pay off this margin, and so I started to get into some trades, and the big trade that actually paid off my margin actually for these Goldman Sachs dip was Q2. After Q2, actually what happened was I made a trade for Q2 that worked out okay, but then after Q2 it went from 155 to 138 and actually dipped to 135, and I was like, man, this stock is trending up. People are gonna come back to their senses, and we're gonna see this take out 155, I think, in a month or two. And so that's when I went in. It was with September calls, and I went in and I said, I want to try to pay off my margin off of this one play. And so I did, and my only regret was I posted my whole play on Tesla Motors Club.
Yeah.
I gave my whole reasoning on saying this is going to be a great trade. I'm going to go in. And what happened was I was asking for feedback, and I got some feedback, but I got like kind of doubtful feedback saying, oh, you should be careful, you don't know, all this stuff. And so I had this X amount to go into the trade, and I said, okay, maybe I'll do half, or I'll start out with a quarter and then build up to half after hearing this stuff. And I got some PMs too, people warning me and stuff, saying be careful and all this stuff. I'm like, before I was telling my wife, like, this is going to be a great trade. So anyways, I ended up writing it from 138 to like 170. And I got out, and I was able to pay off my margin just with that one trade. And then it dipped under 160, and then I bought a bunch of puts.
Wow.
That it could correct under 160. But what ended up happening was it just started to stabilize and go up. And I actually lost money on that put trade, probably about a quarter of the earnings I got on my long trade. But I mean, overall, it was like a great trade. Just that it was like a 3-week trade, and it was like it paid off my margin. And I've been trying different things, but it gets to the point where it's like the gains in our regular accounts becomes kind of so large that you kind of are thinking more of preserving and protecting those gains.
Yeah.
You're thinking, I start to think more long term, like okay, just as long as it stays at this stock price for 5 years later, we're fine,
Yeah.
You kind of have this different attitude because you're kind of like you just want to quit, but you kind of like, okay, I'm almost at the end of this game,
Yeah.
But that's why I'm kind of setting aside new accounts for short-term trading. I'm kind of setting aside kind of these IRA type of like speculative accounts and trying to like focus on them as separate type of short-term trading accounts.
Go ahead.
Yeah. Okay. Thank you. Yeah. In terms of trying to play the volatility a little bit, I think we have a little bit of a sense of the trends on the stock. So, like when there might be potential catalysts, or when there are periods of low volatility or high volatility. And I'm kind of taking on the other side of the trade when I sense there's kind of high volatility, but it's kind of more range bound potentially. I'll get into writing puts and calls, just trying to get some of the premium. So what I did is I just carved off another account and just put some money in there. I have my base shares, but I'm trying to figure, maybe if I get a sense the stock got hammered down for no real good reason, just try and capture that moment to write some puts when the premiums are high. I'd still be happy to take delivery of the stock at the price I'll write, but just capture some of the premium income. And there's always the risk that the stock could just totally move one way or the other with Tesla, but if you get that gut feeling that we're in this period of just a range-bound movement, you can generate some pretty nice income from the premiums that you write. So that's maybe one way you could try and play some volatility. And especially if you're writing puts, if you got the base shares, and the stock kind of moves away up, for example, you're kind of covered. You cap your gains, but you can bring some income in.
Yeah, writing puts is a good idea.
Yeah, I was just gonna say. I mean, my ultimate hedge. I mean, I think I get a little nervous when I was probably one of those guys who was like, "Be careful, Dave," when you were making that trade, and you probably hate that, but I mean, I don't. Maybe I wasn't, but I do think diversification in your overall life portfolio is a huge thing, and as much as it pains me, I've never been all in Tesla, even though I think in my heart that it's the best investment of a generation. I've still I would maintain things just conservative things, not even stocks. Actually, I think mutual funds are a ripoff, and I think they're just fees just eat you, and it's kind of the way Wall Street gets funded, right? So, but you know, I mean, I had gold for a while. I have private equity funds that, you know, get to participate in, but that's more like emerging market stuff. You know, you've got other commodities you can dabble in, cash, even T-bills, and TIPS is something I like. It's a Treasury inflation protected securities. If if God forbid the worst happens, you want to have. I feel like you don't want to get so margin. I mean, you could be wiped out and bankrupt. You know, if you're not just having your capital wiped out, but then you owe money beyond what you kind of put in that, and that's scary. You know, and I think as much as we believe in Tesla, I believe in hedging by. The biggest hedge I do is pull out. So is just cash out. I mean, I don't actually buy puts on the way down or try. Actually, that's not the big. I did dabble last week in VXX, the volatility ETF, which is just this voodoo formula to me, frankly, that creates that thing. But I made a little money trading on. I mean, I kind of felt bad trading on the Ukraine situation because it's horrible. But which, by the way, I think could hit us hard in the morning. We'll see. But I think just being smart about diversification across things is good. But then if you're willing to lose it all and you're cognizant of that, great. But
yeah, I mean,
that's all I'll say.
Yeah, I agree on the general principle of diversification. I think though there's kind of a few caveats where I feel like certain people, if you don't have a lot of assets, then diversification, it doesn't mean much. Like
sure.
Diversification means more as you have more assets to protect. But I think there's a beginning problem of how do you get initial assets, and
sure.
That's you can do that different ways. But yeah, I agree. I mean, like I thought that for sometimes like I was all in Tesla or whatever, but like our situation was we actually had like kind of like it's kind of like it's not a liquid cash diversification, but going into stuff we actually had a decent kind of real estate type of thing we couldn't touch.
There you go.
We also had like a business that we run that provides like income, and that's actually worth something, but it's not liquid kind of asset. It's an illiquid asset, and so but we had kind of like all of our cash that we were able to stick into Tesla. It felt like we're all in Tesla, but we actually had other stuff that we couldn't really touch, and it wasn't really like we couldn't cash out of them. But if we didn't have Tesla, it wouldn't be that big of a deal, because there are other things going on. But that's diversification,
It is. I mean, that definitely is. And, I get worried when I think it wasn't directed at you. Just some people might watch our video and think, oh, I could go in like that too. I just want to make it clear that you guys have job. I have a business in real estate. Actually, my wife and I, do that. So and that's important to remember. Just to not end your financial life based on any one investment. So.
Well, I've been trying a strategy of buying either deep in the money or deep out of the money puts against the SPY and the QQQs, as that as most of my portfolio is solar. There's a speculative biofuel stock I have, Apple and Tesla, and so they're all very they require good market sentiment. And so I kind of think of it as insurance. There's an insurance fee I pay every month by buying the protected puts against the Qs and the Spider S&P 500, and so I just pay that essentially every month to protect, not so much against. It doesn't protect me against just malaise, right? Like Ukraine might end up being malaise for us, like a 5% down or a 10% down. But it's to protect against, oh my God, the world is ending.
Right.
We're going to drop 40 or 50% kind of thing.
Yeah.
Especially on the stocks I'm talking about, the S&P might go a little bit, but I'm thinking the Qs will go a lot more. And so I do this more with the Qs, and it's really to protect against that.
Yeah, I mean, just having like even I don't know what percent you're talking about, but like I just to have a tiny fraction in there. So, like you say, if the world kind of blows up in whatever form that means, you just have maybe something left at the end of the day. I agree with you there.
Yeah, actually, I was like thinking about kind of this whole like possible market downturn type of recession scenario. And FluxCap, I was interested to hear that you actually pulled your money into cash in 2008.
Yep. Yeah.
What was interesting is like I actually kind of had the same kind of thing going on. Back in 2008, I was going to a bunch of these real estate auctions in California, and all these houses that used to sell for $350,000 were being auctioned for like $80,000.
Right.
I'm like,
Wow.
oh my gosh, these banks are gonna get hit.
Yep.
I went to several of these auctions, and they were selling like 200-300 houses at each auction,
Right.
And bidders were like 80,000 sold, 85,000 sold. I'm like, what?
Yep.
And I started to do the numbers. I'm like, there's no way these banks are gonna be able to survive or handle these, mega losses. And so by summer of 2008, I told my family, I'm like, get out of the stock market, right? And I actually went to my parents like a few times, and I started to beg them. I said, you gotta get out,
Sell your mutual funds, right?
Because I'm like, I looked at their portfolio, and their mutual funds are like heavily invested in banks, right? I'm like, what? I'm like, gosh.
Yeah.
So,
Get out.
Yeah, finally at 11,000 they got out. Actually,
Wow.
that was at 11,
Thank
and I was
goodness.
like, wait till you see what happens, And I'm like, some banks are gonna go down, This is going to get really ugly. But I'm curious, FluxCap, in your situation, why did you pull out in cash, and did you have any idea what's going on?
Yeah, so it's actually very similar. I actually, in 2007, I had moved to Santa Monica, to California. I'm in D.C., and I was in D.C. before, and I'm back here now. And it was what was staggering to me was I feel like in 2007, the recession had already started in Los Angeles almost. It really, like you say, the housing market was just getting clubbed. And my wife and I have been in real estate off and on for 10 years or more, and sort of a family business. And no one in Washington had, certainly in the policymaking circles, had any sense of that. I mean, it was just, oh yeah, the banks are doing their thing, and people are buying, real estate's great, and people are flipping houses, and it's it's wonderful. And I just was struck moving to California for even that amount of time, how the disconnect between Wall Street, Capitol Hill, and sort of America, and I was like, this is going to be bad. And I didn't have the intuition to know that banks were going to fail necessarily, but I knew that credit default swaps were a derivative of a derivative, it was just too far removed from what markets were designed to do, which is, make buyers and sellers invest in things that have value. And so I begged my family to pull out like you did, and I mean, I saved them, and I guess there's no two ways about it. And then it's funny, my wife and I started back in the real estate game in Washington a couple years ago, 2-3 years ago now, and we're flipping houses again, but we're doing it at a much lower profit margin and a much more conservative. I mean, we sort of, our value add is like, it's our business, so our design, our market view, and it's low. It's not high margin, but we're okay with that, And if I got a sense again that people were like freaking out about a bubble and sort of getting into it for the wrong reasons, which kind of is already starting to happen a little bit in DC, but we'd probably pull out again. It's just, I think being sensible about what is possible in an economy, sort of a global economy, and what breaks. What's the first thing that's going to break when people get out of the bounds of reality? And probably having grandparents that lived through the Depression and told me a lot about that was a good lesson to me. But yeah, so that was my my insight. I guess that's about.
So I guess the question is this time around it may not be real estate, right? Like what
No.
stress crack or do we see, this time around?
Actually, before we go into that, I just want to let people go if they need to go. I know it's kind of really late right now. Yeah, if you want to just keep on chatting about this, I know this is really interesting, so I'm going to stick around too. But I know the whole first part, focusing on TSLAopt, I think that was very, very informative. We wanted to thank TSLAopt for his time.
Yeah, definitely.
Just the generosity of just kind of sitting down and sharing kind of your thought processes and stuff like that. That's super helpful for every one of us and anyone who's viewing, because that's an experience that you went through, but then we also kind of inherit a bit as we listen to it, We kind of gain some experience as well, and so it kind of helps all of us out, and so it's tremendously valuable. Thanks for taking the time out and sharing that.
Hey, no problem, no problem. I'll stick around for a little bit too,
Okay.
just to talk about this other stuff. I'm curious about it too, but I might leave unannounced if some people are in the middle of talking. I don't want to distract anyone, but I'll participate for a while longer.
Cool. Sounds good.
Thanks, man.
On this economy stuff.